Uh, it looks like oil is the flavor of the season, and I'll continue with the flavor. While Yuri talked about the impact on the global level, then Hitesh trickled down to and narrowed down to GCC. Now I'll further narrow down closer home, which is the UAE market. We will look at what is the impact of the falling oil prices in UAE cement sector. But before that, I'll give you a very quick roundabout of what exactly happened. Why are we seeing the fall in oil prices as we do? What has been the impact of these oil prices in the global economy? And then we would look at what has been the impact in the UAE economy. And then finally, we'll come down to look at what is the impact at the bottom line in our factories in UAE. So what really happened? So actually, if you look at this last about 10 years has seen very good oil prices, and the oil exporting companies, especially the countries where we come from here, did very well. And with the oil prices going up, the revenues improved. But what we see happen here is a sharp fall. Now, what did happen? Like we saw in the last decade here, thanks to increased demand from China, thanks to growth in emerging markets, and this demand went up, whereas the supply were issues in Iraq, Arab Spring, there were uncertainties. And all this led to US and Canada, who were not looking at expensive sources of oil, which is shale or oil sands. Now this suddenly became more attractive. They started looking at it. And the supplies at the same time continued growing. US saw record production, and in shale oil, their capacities increased to almost the same capacity. To put it in perspective, in the last 3 years, what US has increased in shale capacities is the same as the capacity for UAE as a whole. So huge capacities came in. Libya, Iraq, we were expecting it would kind of continue to be in problems, but their capacities came on board. At the same time, the demand in China, Eurozone kind of started petering off. So we had a huge kind of stockpile of oil available, demand not picking up, supply side increasing tremendously, and prices slightly started to kind of fall. And it was expected that somewhere in November during the OPEC meetings, OPEC would take into account of the falling revenues, and then they would shore up the prices, reduce production, which normally Saudi leads, and it acts as a swing producer. But in this case, Saudi stayed back. It did not kind of reduce prices. And what has been the reason for Saudi? Was it a gamble which they had played, and whether it did work? Saudi saw that last time in '86 when there was a price fall and they had kind of reduced production, it kind of impacted the market share, impacted their revenues because their volumes came down. Their prices came down, volumes came down. So this time they said we are kind of staying put, and they were backed by the huge foreign exchange reserves which they had. So they have enough reserves to last for another 10 years. So they are not worried that with reduced oil prices it would impact them. But at the same time, they wanted to retain the market share. They want these new capacities which had come in here with shale oil, etc., to kind of to price them out, get them out of production, and in the meanwhile, in the next 4-5 years, when these would be out, Saudi would again remain strong. Again, there is a geopolitical aspect also into this. Saudi, the oil prices, Saudi has